Hey everybody, how are you guys doing today? This is Morgan Tapp with Papillon House Bookkeeping, and if this is your first time tuning in, welcome. This is my little slice of internet heaven, and I like to hop over and talk about all things related to bookkeeping, and that's, whatever's going around the office this week or things that clients have been asking, questions that have come around that I think we could help people about, because that's what we're about over here, is helping people earn more money, understand how their businesses work as it pertains to finances, and basically just make bookkeeping less tedious, less of a headache, less annoying. And I try really hard to be real. I mean, like, what you see is what you get. And I try to be fun, and I'm probably a little silly or goofy. But this week, I want to talk about S-Corp versus LLC. And this is a little tricky, okay? I am not a CPA. We have a CPA on staff, all right? So if I bumble a little bit, don't hate me. It's because this is what I pay people for. But general concepts, okay? That's what we're going to try to cover here. General advantages and disadvantages, and the idea of why you should file or not file. All right, so let's jump in and see how well we get through this. Okay, first things first. S Corp is a tax code designation. All right, when you create your company and you make yourself an LLC, limited liability company, that's it. Okay, if you then go and file for an S Corp, check the box, you are still an LLC in your business. You are not a corporation, okay? You have not somehow magically incorporated yourself when you check that box. It just means that now when you file taxes, you are subject to different rules, okay? That is one thing that I have to explain every time. So, S Corp means small business corporation, okay? It allows the owners or shareholders to only be taxed at the individual level, okay? Instead of both the corporate and individual level. I know that gets confusing because they're saying corporation, and that's why everybody gets all messed up and it's all hinky, but it's the IRS, so what do you want? All right, so that's what it's doing. When you are an LLC, you get taxed at both. You have to pay all the 15.3% on every single thing that you make, every dollar that comes through. Okay. When you have an S Corp, you are then allowed to treat yourself as a shareholder, like where you have separate wages and then whatever's left, the distribution, and it will tax one part one way and another part another way. Okay. I'm going to try to get through it and make it make sense. I hope this helps. So, the biggest advantage to an S Corp status is what is called pass-through taxation, okay? This means that your company is not taxed on the income it generates. Instead, you can take this income and you can distribute it to the owners, shareholders, whichever, okay? It also gives you like another layer of limited liability. So, an extra layer of security on your personal assets in case your company is sued or you dissolve it. You have that extra layer where it is separate now from your personal assets. So, it just gives you that extra layer of protection. Okay. Um, it allows you things like investors and shares and sales of stock, which I am not going to get into because that is not general, but it is there, and we can research that more at another point in time. But we're just going to be here and talk about like the general advantages and disadvantages. Okay. Another thing is your business will continue to exist even if you were to die. or retire. You can pass it down to someone and it's no longer attached to you. So now it is its own thing and everybody loves it. Okay. So, okay, let's see. Where was I? Now, there are some disadvantages. Okay. Let's wait on that. Let's wait on that. Let's keep going to what is pass-through taxation and how it helps you and what the difference is. Then we'll get into why maybe it wouldn't be a great idea. Okay. So, pass-through taxation. Let's pretend, I like easy numbers. Let's pretend we have a company and they generated $100,000 in profit. So this is net, okay? Not gross, net. It's what's at the bottom of the P&L. It's after all the expenses come out, okay? Now, let's pretend that we have this LLC and we have checked the box and we are now an S-Corp, okay? That means, let's say it's me, okay? Now I get to be an employee of my LLC, not just being the LLC. And let's say that I decided to pay myself $40,000, all right? So we've got $100,000 in net. I paid myself 40, 60 left over, all right? Now, that means that my $40,000 is going to be subject to all of the taxes. Social Security, Medicare, FICA, all that stuff, okay? That is taxed over here. Now, my $60,000 that's left over at the end gets to pass through that S-Corp and not be taxed at the self-employment taxes, okay? It is only subject to the income tax for my bracket, like where I fall on the tax code. So I get to save self-employment tax on that 60%. I get to split it. Do you understand? Does that make sense? So I've got my W-2 amount, my salary over here that was taxed at the self-employment rates. And then I've got my leftovers that's only taxed now at whatever my state or whatever my income level is. Sorry, not state, my income level. So in a lot of ways, that S-Corp tax designation saves me money on my payroll tax because now I'm not paying twice as an employer and an employee, which is what happens when you don't have that. Okay? Does that make sense? If I had not done that, I would have had to pay the self-employment tax and the income tax on the entire 100,000. But because I separated it, I've got part over here and part over here, which lowers my overall tax obligation on that 100,000 with regard to employment tax. Okay. So, but there are, let's go back to the disadvantages because there are rules, right? First off, you have to pay yourself what is considered a reasonable wage. And the reasonable wage is a nightmare. That is everyone's scariest question. Like, oh my gosh, how am I going to pay myself? Like, what if I don't have enough liquidity? What if I have a slow month? That is everyone's panic point. So I'm going to break that down for you. First off, it's a reasonable wage, guys. So whatever your job title is, like I'm a bookkeeper, whatever your market is, wherever your state is, where you live, it all changes, okay? A reasonable wage should be about 30% of your gross. Before you panic, you can underpay yourself by a little, and then at the end of the year, give yourself a bonus. This bumps up your rate, your salary, and keeps you compliant and also allows you to have more liquidity throughout the year in case you have a slow month. Okay? Now, you also can pay yourself whatever that wage is supposed to be. And then you get to decide whether you want to put some of that money back into the business, right? As an owner investment. That also increases your liquidity. But the tax portion of that obligation has been paid. Uncle Sam gets what he needs and you stay compliant. Some of the other things that you have to do is, I mean, you're supposed to have monthly meetings with minutes. You're supposed to record the minutes. You're supposed to pay your quarterly tax filings. It just means that once you check that box, the IRS kind of looks at you a little harder. So you want to make sure you're doing everything by the book. You want to make sure you're recording everything properly. You want to make sure that you are keeping track of everything, paying yourself that fair wage, even if you are going to put some of it back into the business or maybe pay yourself a little less than what you should, with the understanding that you're going to give yourself a bonus and adjust at the end of the year. Okay. I hope this is making sense. I'm trying hard. This is a really technical thing. This is the generalized way of doing it. Okay. When should you become an S-Corp? Okay. If you're, well, you have to be an LLC. All right. If you have to have less than 100 shareholders, everyone has to be part of the United States. Everyone has to agree. Can you afford to pay all of your shareholders what is considered a reasonable wage? I'm trying to think. Sorry. Yeah, that's about it. More on reasonable compensation. I just want to reiterate that when you decide, you can start thinking about what do you really need and what is fair for you and your position in your business, in your market to make. Okay. And then you set it up. We use Gusto, but you set it up in whatever payroll company that you are using and you pay yourself that. And then at the end of the year, you should be having kind of quarterly meetings with your CPA all along. You should be looking at this. You should be filing your quarterly payments so that you don't have penalties. But you have that opportunity at the end of the year to assess and then pay yourself a bonus, basically. You can do a comparison of salaries paid with your gross income and your net income of the business and kind of see where you fall. You can do some market research on whatever the prevailing wage is for your area, your general economic conditions. It's also pretty easy to file. Let's talk about that because everyone wants to know how difficult it is. You should have your CPA. You have to prepare your financial statements. You have to issue your W-2. And then you basically just fill out the form and submit it. Okay. You give it to your CPA. You can do it with your CPA. They file it for you. If you don't have a CPA, I mean, we have one. We can file it for you. But I feel like I've gotten a little off topic. It's a little convoluted. But the point is that you can kind of decide when you reach this point to file, and it is not the boogeyman that it is made out to be. Are there some rules? Yes. Do you have to start keeping track of things? Yes. But if you've got good books and you're keeping good financial records, it's nothing really should change in your day-to-day other than now you have a designated salary coming along for you. And if you don't have good books, well, then you need to call me because we need to get you straightened out. But, that's a different conversation. If you have some more questions, it's a little easier for me to answer them when I have the specifics of a question. Hopping over here, just trying to give you guys some general information on when to file an S-Corp or not and how it can help you save some money on your employment taxes, that's all I'm really trying to do for you here. If you have specific questions, or maybe you don't have clean books and you want to get to the point because you know that you're probably at that threshold where you need to file, then give us a call. I'd be happy to answer any questions for you. I'd be happy to listen to you and kind of help you make a plan, even if you're not a client of mine, because that's all I'm ever really interested in, is I want to help people. As you can see, education and literacy is like one of the things that we work on. We have no problems talking to clients or non-clients about their books and ways to do best practices for their business, because at the end of the day, all I really want to do is help everyone. So I hope this has been at least a little bit of a refresher or a general informative session where you can get a little bit of information. I hope it helps. Again, this has been Morgan Tapp with Papillon House Bookkeeping. If you want to talk to us, I am so easy to get a hold of. Papillon.house, Morgan@papillon.house. Just shoot me a message or an email, and I would be happy to help you in any way I can. But I hope you guys have a great night and have a wonderful week, and we'll talk soon. Bye.